Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching the closing trade on market today. The Nifty has scaled another record high for the third straight session, cruising past the 18,600 mark. Overall, the key indices are off the day's high. Metals, realty and auto stocks lead the charge. PSU banks drag. The mid-cap index trading with gains of 0.5%, while small caps are sporting flattish trade. And joining me on the show today to take us through the entire market action and what to make of the direction that our markets are headed is Nipun Mehta, a market expert. Nipun, welcome to the show. Your opening comments, really, we are seeing a directional sort of move up ahead. Would it be fair to say that investors are have overcome the worries that were on account of inflation or slowing growth and all of that, and are just looking at the positive side in the market action?
Well, good afternoon, Siddharth, and thanks for having me on the show. I think as far as Indian markets are concerned, yes, we've clearly had a reasonably strong upward momentum. A lot of it backed by fundamentals, whether you call it relatively stable inflation in India, positive macros, good tax collections, reasonably good corporate earnings, a fair amount of government spend on infrastructure, more visible and clear domestic demand, fair amount of demand coming in out of consumables, automobiles, and a lot of the other sectors. So clearly positives, which is driving the markets. On top of it, clearly there's liquidity flow from the foreign institutions, which is also supporting the markets and which is driving the markets up, particularly the large caps. The concerns clearly are on the other side, more on the global level, global scale, and one of the prime contributors of global growth, which is China, is in a state of lockdown, which is a primary concern. US in a state of high inflation and increasing interest rates. Europe probably almost starting to get into a severe recession. So yes, there are global concerns that are there. But I think right now, for the moment, except for the next 3 or 4 major events as far as the next two months are concerned, which is the RBI policy, the 2 state elections, and the budget coming in about 2 months' time. I think we are likely to see, or we have seen, fairly decent corporate earnings. What probably it is leading to is a huge, fairly large differential that's happening between global valuations and domestic valuations, with fairly high premiums as far as the domestic markets are concerned. So I won't say the concerns are entirely out of the way, but I think clearly positive news flow as far as the domestic economy is concerned is driving the markets up.
Absolutely, and if you look at market action today, it's very clear that we are seeing the IT pack do decently, and we've seen Bajaj Auto, Eicher, M&M up ahead of sales, RIL in fact, and if you look at M&M, the HDFC twins, they've been top contributors today. Gas stocks reacting to reports of new pricing proposal recommendation. We'll have to wait and watch whether they indeed get accepted. But MGL, IGL up. Railway stocks also scaling fresh highs. If you can take a look at RVNL, IRFC, IRCON on reports of the government's capex push, which is also expected to be the broader theme in the entire budget. Nipun, just one quick point to what you were telling us earlier. From now on, the way I understood what you just told our viewers is that there seems to be a direction, and if I may put it in my words, in the upward, sort of northwards. So would it be fair to say that the only first sort of hitch or speed breaker that investors can anticipate would be 1st February, which is budget day?
So I would think, like I said, 2 potential speed breakers that could be there. One is the 8th of December when the 2 state election results come out. And if there is a negative surprise, not entirely expected, but just in case there is, that could act as a speed breaker. The other, of course, is the RBI policy that we're likely to see in a short time, where there is anticipation of uh, uh, close to about 35 basis points or thereabouts of interest rate hike. If there is a pause or if there is a lower hike, it could be a serious positive. On the other hand, if it's higher than that, that could act as a bit of a dampener. So before the budget, these two events probably, beside of course lot of the global announcements that come by. Beside that, at least as far as the domestic markets are concerned, these two could be potential speed breakers, I would say.
Well, that's right. The reason I focused on the budget was because you could also argue that much of the expectations around the RBI and the election results are priced in. Gujarat is pretty much priced in. Himachal may not that be too much of a surprise. Nipun, just stay on with us because my colleague from Business Today, Asim Thaplial, earlier did an analysis of what's happening on the IT pack. TCS, Infosys and Wipro have recovered nearly 20% from their 52-week lows. Asim, put it in perspective. What is the key reason for this up move as you see it?
Thanks, Siddharth. The recovery in the IT stocks, it comes on the back of lower inflation in the US, which has led to slowing down of interest rate hike cycle. So the Indian markets are buoyed by the sentiment in the US, and the IT stocks are rallying behind the Sensex and Nifty. So while Infosys has recovered 20% and Wipro has risen 8.33% from its 52-week low. Also, the shares of TCS have climbed 15.58% from their yearly low. So, the Infosys share had touched their 52-week low on September 26, and similarly, the shares of TCS also had touched their 52-week low on September 26th, the same day. So, this is a span of 2 months. In a span of 2 months, the the IT shares have recovered nearly 20%. So we have a outlook of these stocks by the analysts. Abhijit from Tips to Trade has said that a daily close above rupees 406 for Wipro could lead to a further uptrend till 416 to 420, and he sees strong support at 389. Similarly for TCS, he says the stock faces major resistance at rupees 3420, and investors are advised to book profits at current levels and wait for a dip near 3250 to rupees 3255 to re-enter for higher targets of rupees 3625 to rupees 3690. For Infosys, he has a target of rupees 1728 to rupees 1760 in the near term. He says Infosys faces massive resistance at rupees 1631. So he says investors should book profits and wait for lower levels near 1546 and rupees
Okay.
1550 to buy for the targets mentioned.
Okay. Thanks very much for that quick check on IT stocks. Nipun, I want to take that part of the conversation with you further. What's your sense about the IT pack? There was a significant amount of nervousness in the recent past, but as Asim said, now we are clearly on up move.
I think, like Asim said, on the one side, of course, relatively stable figure on US inflation is something that helped the IT pack. There were concerns that there would be lower orders coming in from US, which is one of the larger markets as far as the Indian IT companies are, or larger Indian IT companies are concerned. We have constantly maintained that the IT pack unlikely to get so badly affected as what the market had priced in. And there was a degree of bottoming out a couple of months back. Because the sense that we got was the Indian IT companies played it relatively smartly by, on the one side, not recruiting too many people or not having plans for recruiting too many people for this year. They kept their costs fairly stable. The order flow in terms of client additions was coming in any case. A lot of them changed focus on geographies. They changed focus on being from pure service companies to product companies as well, depending on which company you're talking about. And the management commentary never really was sort of cautious in a way. They continued to gave the guidance of close to anywhere from 15 to 20% growth that was there. So our sense is, yes, I think IT companies are unlikely to be getting deeply impacted as far as order flows are concerned or client additions are concerned. And we would be positive on the entire IT pack, particularly the large caps as well as the mid caps within that space.
Nipun, one of the other themes that we saw was gas stocks reacting to reports of the Kirit Parikh committee report being submitted to the oil ministry, and according to news reports, the panels has suggested that caps on gas prices be removed in 3 years. Explain to the retail investor, the general investor and not the sophisticated one, why should they be responding to a news where there are a lot of ifs and buts? One, it is a recommendation. We have seen what has happened in the past to various other recommendations of such committees, and the fact that there is a 3-year timeline. So, why would gas stocks react positively to such a sort of preliminary news item?
So on the one side, market tries to discount the future, and I would think this is like exactly as you said, over something that is implementable over a 3-year time frame. Probably markets have run ahead of something which is just a recommendation at the moment. But I think more than that, what's important is for the entire gas pack. On the one side, if there is lesser government intervention in terms of pricing on the one side, on the other side, the kind of infrastructure that's been actually put up as far as the entire gas supplies, whether it is LNG, CNG, all of that, both just not just in terms of demand but also in terms of the infrastructure set up across the country, is sure to increase demand considerably. So there's far greater visibility now for gas companies in terms of increased revenues, increased profitability as compared to what it was maybe a couple of years back. And I think that's getting priced in as far as the gas companies are concerned over the last few months that we've seen the price run ups in.
Fair point, and just as an add-on to what you said about the government and its role in energy pricing, we've seen what has been playing out since May when it comes to petrol and diesel, and that has its own impact on our oil marketing companies. But you could well argue, which is what I did with government officials, and they said at a time when inflation was at unprecedented levels and no one knew how inflationary expectations would be impacted, it would be difficult to not expect the government to try and cool energy prices, and not just India. In fact, other governments across the world have also been doing that. Let's take a look also at Bajaj Auto, M&M, iShares, which led the gains on the Nifty today. What's your sense about the auto turnaround? You get a mixed picture which was prevailing pre-monsoon really, Nipun. How I divide it, and post-monsoon and Diwali there's a different picture when it comes to ground level checks and the sales distribution pattern. What's your own sense about the auto pack?
So on the one side, of course, tomorrow we have the auto numbers coming in for the month of November, and there's anticipation that numbers are expected to be far better than what's broadly anticipated by the street. If you look at sales, or if you look at demand that's come in as far as the domestic market is concerned, it's actually increased far more than what was pre-COVID as well. Add to that the EVs, both for two-wheelers and four-wheelers, and those are added numbers which probably weren't existent 3 years back pre-COVID. I think the export sales, wherever in whichever companies there has been significant export contribution, have clearly suffered, but that's probably more than compensated by domestic demand that is there. And you're seeing it really on the roads and the kind of ownership that is there. And surprisingly, that is despite the fact that interest rates have been moving up, and typically auto industry is one which gets impacted by higher interest rates. But this time around, we haven't seen even that. So it was not just the festive purchases that were there, but even post that, we've seen a fair amount of demand coming in. I think that's clearly getting priced in as far as autos are concerned. The moment you have a degree of certainty as far as exports are concerned, that's only going to add further to the numbers that we already have on domestic demand. So positive as far as both the entire auto space is concerned, two-wheelers, passenger vehicles, to an extent, even HCVs, where we are seeing a fair amount of uptick backed by capex that's been there as far as the private sector is concerned.
One of the other broader themes that I want to take up with you is the quality or the granularity of the rally that we have seen in October. If you take a look, it's not really been a broad-based rally, and mid caps and small caps have not really participated in that major way. Five stocks accounting for over 50% of the increase in the Nifty. What do you expect to happen here on? And we will get more numbers, earnings details from many of these companies that we are talking about, Nipun.
So I think that's bang on as far as analysis is concerned on how the markets have moved, not just in October, but also in the month of November, where
Yep.
you've had probably more large caps or a few large caps driving the indices higher. The mid cap and the small cap indices have been relatively flat or with probably a marginal increase. And if one compares it with the same index levels on the Nifty about a year back, when in sometime in October we were at similar high levels. Probably from those levels, the mid cap and small cap indices both have actually fallen in comparison to 1 year back. So I think that participation has been limited. There's been a fair amount of profit booking that's there. I see a lot of that happening in companies and stocks where profitability has not been very consistent. So after we had the September quarter results, this fall started off in October and November, continued in November, wherever companies had sort of ups and downs in terms of profitability, in terms of revenue growth. The stronger ones haven't really fallen to that extent. They have participated to a degree. Our sense is that incrementally, these stronger, about 150 or 200 of the mid caps which are there, and a longer probability list of small caps which has shown a degree of consistency, more cost effective sort of operations. These are the companies which probably will perform as you see markets going. If markets going higher, and if let's say the large cap indices consolidated current levels, there could be further participation that could happen from some of these fundamentally strong mid caps and small caps as well.
Nipun, we'll also get more details of macroeconomic performance through the Q2 GDP numbers later today, and I expect much of that has already been priced in. There's a sense that the biggest question that we'll need to find answers to is the post-COVID revival. Do we get cues of that sustaining? But again, specifically to the markets, and as we count down to close in a few minutes from now, we've seen highs both on the Sensex and Nifty, and these are record highs after last October, so basically after a year. The question that I really have for you is that will there be a peak again, or are we now sort of at the cusp of another bull rally of sorts?
So, Siddharth, we've seen a reasonably strong rally, reasonable momentum upwards as far as like I said, the large cap indices are concerned, both Nifty as well as Sensex is concerned. That's being actually driven by maybe a few stocks, maybe a few sectors. You're not seeing the same sector outperforming on a consistent basis. You've seen banking probably is one sector which has continued to participate fairly actively. There are maybe a few select stocks within other sectors which have participated and which have a fair amount of heavy weightage and which have ensured that the indices sustain. You have now the IT index which has started participating and which is again supporting the markets and ensuring that the large cap indices are at their high levels. So it's actually not one single sector except maybe for banking which has ensured that there is that participation that is there. Our sense is, as there is far greater certainty now as far as domestic demand, the capex certainty is there. We are seeing credit growth. We are seeing potentially higher rural demand coming up. We are seeing sectors like autos participating, coming out of a fair amount of rural demand that is there. Our sense is, given the extent of liquidity flows that are there, and presuming that the differential between the global markets and Indian markets doesn't become very significant, you are likely to see continue to see further inflows, and you're likely to see greater participation coming in, continuing in a lot of these large caps. So yeah, you could see indices consolidating at particular levels. We haven't seen that kind of consolidation really as far as the Nifty and the Sensex are concerned. But as and when that happens, post that, you could see further large caps participating upwards, and you could see new highs clearly coming out of fundamentals that are driving the Indian economy.
Briefly, 18,800 on the Nifty as you were speaking, Nipun, and to take that point on liquidity forward. So we saw a lot of shocks, again, all external shocks, largely Ukraine, and we saw what happened to the energy pack. And now, like you correctly point out, there's a reversal as far as inflows are concerned. But the domestic side of the story also, domestic investors have also played a crucial part. So if I were asking you to go beyond December, and for much of the Western world, business and trade slacks off around the second, third week, but into the new year and beyond, what would you tell first time or more recent entrants into the Indian markets? What kind of strategy should they have in mind?
So I think it's always it plays on the mind, or one needs to exercise a bit of caution when we are at market peaks, and we are at a market peak as of today. And whenever we are at market peaks, it's always better to exercise a degree of caution. But I would say the participation in mid caps and small caps, like I said earlier, probably is still to come in. That's something that we anticipate should come in the new year. This is, of course, provided you have continued uncertainty as far as the Western or developed economies are concerned, in terms of inflation, in terms of recessionary conditions, in terms of constant increase in interest rates. Because the moment you have greater certainty on that side, you could see fund flows reversing, with ensuring that this huge gap that's been created. Look at China, for example. One has seen clearly a lockdown effect that's coming in as far as the Chinese markets are concerned, as far as the Hong Kong market is concerned. And there is for the year, the Hong Kong market is upwards of 30% down. The moment there is that opening up, you could see flows going back to, say, Hang Seng or chasing the Hang Seng. And clearly there is a limited extent of fund flow, global fund flow that's there. And that clear valuation differential could pull funds in another direction. So presuming that conditions remain the same and the domestic economy continues to outperform and the global economy stays in a state of slowdown, you could see greater participation coming in from mid caps and small caps in the coming year.
Nipun, September earnings growth numbers didn't disappoint. It's been a pretty decent quarter. And if we see in terms of inflation, which has put pressure on margins, that also largely the commodity or the input inflation that producers have seen in India. What's your own sense about earnings going forward into the new year?
So I think on the one side, all the benefits that accrued to a lot of companies in terms of cost savings, in terms of, it could be work from home, it could be lesser travel cost, it could be for various reasons, whatever cost efficiencies that a lot of managements ensured within the companies. All of those benefits have really accrued over the last 2 or 3 years. Incrementally, I think interest cost is something which is likely to be impacting profitability for highly leveraged companies, which is the reason why within the mid-cap space or the small-cap space, one needs to look at or search for companies which are not highly leveraged. It's the same point that was there maybe a couple of years back when a lot of these companies were highly leveraged and couldn't really service their interest costs. So that's a key factor that needs to be looked at. And there will be sectors which will continue to outperform when one looks at the December quarter as well.
Okay, absolutely, and very clearly as we see the markets close, one more good day of trade. Nipun Mehta, thank you very much for your time. Hope to do a check again with you in a few weeks from now on the markets. Thank you for being with us today. And take a look, viewers, on the numbers right there for you. Nifty briefly flirting with 18,800. Up almost 160 points as I speak. The Sensex above 63,000, and that's a pretty decent closing that we are almost on the cusp of. And yet another day, in fact, I would say the rally lasting 5 days and more. We'll have to now look at the growth numbers for the previous quarter that are going to come in just around 2 hours from now. But like Nipun Mehta said, and what market experts are saying, that a good quarter is largely factored in. Lower inflation is factored in, and I think there's been a peak even when it comes to currency. So some of those key factors for the markets really working and feeding into a positive sentiment. 2 or 3 key events that we need to keep an eye out for. One would be the RBI and what it does with interest rates, 7th, and immediately a day after that, the results of 2 state elections and 1 municipal election. Not really sure whether the markets would be too worried about that. There are different expectations, but we'll wait for the political inputs to come on that. And then, of course, the big one, whether it will be a speed breaker or whether it will provide further runway for our stock market to boom, will be the 1st of February and the budget. And the markets have closed. So a solid day on Dalal Street and a good day for metals, auto, IT pack. And we see that the markets continuing to be in a bull trend really and testing new highs as we continue over the last week. We'll continue to bring you coverage of the markets here on Market Today on Business Today television. Stay with us. Goodbye and see you again.
Hello and welcome. You're with us here on Business Today TV. I'm Abha Bakaya. Here are the day's top stories. Are India's income taxpayers set to see some relief in Budget 23-24? Revenue Secretary Tarun Bajaj, in an exclusive interview with Business Today TV, says there is need to tinker with some tax provisions, may give relief to some, not to everyone. Revenue Secretary Tarun Bajaj on the possible changes to India's capital gains taxation policies tells Business